Great. So, as Alexandra mentioned, my name's Simon Levene. I'm a venture capitalist at Mosaic Ventures. We invest in early stage European technology startups, and it's my privilege to moderate this trio of wise men who are going to talk about how larger companies or older industries are meeting the challenge of new technology. And maybe we just go through each one individually. Introduce yourself so we know who's on stage.
Yeah, thanks. My name is Gisbert Rühl. I'm the CEO of Klockner & Co. So really an old company, more than 110 years old. And we are, since a couple of years, in a significant digital transformation. We are, as a steel company, we are a steel distribution and service center company. So we are not a producer. We are, if you like, in the middle, so between the producers and the customers.
I'm Andre. I'm founder and CEO of Flexbus, and we build a very digital, technology-driven business on a very old-fashioned industry, so driving buses across Europe. So that's not the new invention. The invention we had is how you build a platform and technology business on this very traditional industry.
Hi, Niki Kolev. I'm the lead partner for digital transformation and venturing at Deloitte. Well, we build ventures for the corporates. We disrupt our own business by building companies instead of writing slides only. So it's interesting times for us as well.
And maybe it'd be good to start with you and to sort of frame the question, you know, with all the clients, and I'm sure that, you know, you advise at least a quarter of this room or more, and you know, many traditional companies that are facing these challenges. You know, what's the first slide of your presentation when you walk in the room and explain the services that you can provide, and what's the single biggest common challenge that they're facing, and how do you feel it can be met?
We don't do slides anymore. So I think a massive challenge that we see right now is, and that's what we discussed also in our briefing discussion, when you have, as we do have in Germany especially, but also in Central Europe, so overly successful companies over centuries, made in Germany is a label for 110% product, service, it's success based on 110%. And then you go and say, it's all about platforms now. It's a 80-20, it's not finished. You got to finalize it with the client. That is a massive challenge. It's a massive challenge to understand for successful people. It's a massive challenge to be rewarded and understood by investors and analysts, because when you're a listed CEO and you go out and have a great vision for a venture that you ought to build, which is going to either be successful or not, it's not going to produce results in the next quarter.
So to restate, it's a philosophical hurdle to move from being 110% excellent to MVP, let's launch, we might fail, take risk. Is that a fair assessment, or is it more nuanced than that?
No, it's really not philosophical. I think it's very down to business and to execution. So just going away from being convinced that it has to be 110% and you know it best for your clients, rather to going into a platform logic where you, with your clients, develop it and continue to develop it.
So maybe we can bring that point to the steel business, and you, Gisbert, where, you know, you've been at Klockner, I believe, for a dozen years, and this is a business that was started in the 19th century, so it's been around a long time. When you embarked on the changes that, you know, maybe you could spend at the start 30 seconds a minute talking about how you're restarting or disrupting your own business, what was the business logic for that?
Yeah, the business logic was that with all these new technologies and possibilities and opportunities with clouds and that our business, especially as a so-called middleman, would probably come under pressure somewhere down the road. Not immediately when we started 4 years ago, but somewhere down the road. And then we developed this vision of an industry platform. To be honest, at that point in time, I even didn't know the platform, what a platform is. I was talking about exchanges, but in principle it was the same. And this is, I think, important. And this is the difference maybe to efforts we had also in the past. We started quite small. So we started in Berlin in a co-working space. We started with 2 people, and then we did it like a startup. And this was also important to learn for us how startups work, what startups do differently. And along the journey of the last 4 years, what happened is that we brought our assets we have as an incumbent, customers, suppliers, the product and process know-how together with this agile environment of startups. And I think this is the reason why it worked so far pretty well.
And in order to make that change, how contentious was the management board discussion, and was there a fear of shame or a sort of sense that you were skating on thin ice, or was it something that you all understood the inevitability of what you were trying to achieve?
No. And the fear is not only on board level, it's on every level. Now, for instance, our salespeople have to convince the purchasing guys on the other side to do business through platforms, or at least online with us going forward. But if both fear...
And before that, it was all done over lunch
manually,
or...
by fax, by telephone,
okay.
and so on. But when they both fear to lose their job, when platforms coming, they will not support it. So you also have to explain your people on and on how the future will look like. We do this, for instance, with some kind of internal Facebook. You have to make sure that your people have to be able to learn how digitalization works going forward. We have a digital academy, so you have to do a lot of things to convince and to transform the company itself on the one side, but you have also to make sure that the current business works on the other side as a public company. So I also cannot tell my equity investors that in 5 years everything will be better, and now it's getting a bit harder. But so you have to manage both. On the one side, this change, and this is maybe the biggest challenge. So on the one side, the change, but on the other side, also the current business.
And for this new entity, is it still in a co-working space or outside of the corporate buildings and sort of...
Yeah, we have a separate entity called Klöckner.ai in Berlin with meanwhile 85 people, 85 digital natives. And here, by the way, also then the challenge is to make sure that they are on one side independent enough to keep this agile and startup environment, but on the other side, you also have to make sure that you leverage the assets you have. So you have to find the right balance, how this kind of startup then works together with the corporate side. And we currently launched also a new venture, and this will be an independent platform for the steel and metals industry, which will be financed, by the way, with venture capital and make even more independent from Klöckner, because here also competitors will have access going forward.
Okay. So we're going to come back to talking about steel, but I want to bring in Alex and the passenger transport bus business, which here in Germany is dominated historically by Deutsche Bahn, Deutsche Post. And can you explain a little bit for those who don't know the story of Flexbus and how you came to attack that business, that industry from the outside, and why you think that brings you an advantage?
I think it's over the last 5 years, and we just started 5 years ago, and last year we had 40 million passengers. And the point is, I think it's very hard to innovate in a new market and with that mindset if you have a legacy. And we really perceived that our competitors typically were huge companies like Deutsche Post, Deutsche Bahn, billions of euros, 10,000s of people, and we had no real advantage. We had no clue about the industry, we had no clue about building a company, we had no clue about a lot of things. and the least about transportation. But I think in many ways,
But you raised a lot of money from some venture capitalists who believed in you.
Yeah, exactly. And now it's easier to tell the story when I know how it went. But the point is, I think that was in many ways an advantage because we're very fast learners. We had nothing to lose and we had no legacy at all, so we could do anything. I mean, we always had a picture in mind, and actually we had a case which was like 5 years in the future, and we are standing there today, and we are like 5% wrong on that case in terms of revenue and what we're doing in the business. I had no fucking clue about the way, so the last 5 years went totally different than I imagined it, but we always knew where we want to get. And I think it's so much easier if you're startup, if you're new in the market, if you don't have anyone to be responsible to, no one to explain what you're doing. Your whole team believes in your vision, in your idea, your investors back you, and you have nothing to lose. And we were always fighting for this opportunity, and all our competitors, they had something to lose. They had historical legacy, they had a name to lose, money to lose, employees to convince, and we had nothing of that. And I think that was all our non-existent legacy was a huge success factor for us if you learn fast enough, if you adapt fast enough, and if you the right culture. And so I think it's, and I hope Gisbert proves me wrong, but I think it's super hard for corporates to get that spirit on the bottom, to have this mindset of working, and on the top to tell about a vision in 10 years, 20 years, and not focus on the next 1 or 2 or quarters or something like that.
And specifically in the kind of bus sector, you know, if you had been sitting in Gisbert's chair, if you had been at Deutsche Post, Deutsche Bahn, which obviously you weren't, you never thought about that career path, but if you had have been, is there any way that you could have defended from something like Flexbus, or was the challenge purely human and people and inertia, or was there kind of an innovator's dilemma or a reason that, as the incumbent, they couldn't avoid being disrupted, would you say?
I think it would have been possible, especially in a business with of course assets and something real. So we are a platform business, but there are real assets out there. There are 1,500 buses, 7,000 drivers. They do not work for us. We don't buy the assets, but it's a real business out there. So yes, you have an advantage as a large corporate, but you need a lot of guts to take that step. And the only way to do it is really totally separate it, give money there, become a financial investor, not a strategic investor. Don't tell the others what you want to achieve. Say, just win. We can give you whatever you need. We can give you data, we can give you resources. I can give you my backing, I can make introductions. But as soon as you try to match it first, the strategic perspective of your old business and your new business, you're losing traction. And we are building, for example, a charter platform where you rent buses. New business model could be very close to our existing business model, but we lead it as a venture. So we just have an isolated team, we give them money, we give them resources, we give them tech, and we give them a case. But besides that, we do not say integrate in the line business or look for synergies. We're going to do this 5 years down the road maybe if the business is successful, but not too early.
So you're already cannibalizing yourself. So one of the things that you've all sort of intimated is the time horizons of these kinds of changes, and if it's going to take 5 years and you've only just got going, and you're 4 years into your platform change, and maybe before you know you're successful, it's going to be 7 or 10 years or more. How do most management teams that are running traditional businesses deal with that kind of time horizon?
Yeah, you need also some kind of quick wins. So it would not work when I would tell my equity investors and my supervisory board that we investing in something which could be successful in 7 or 8 years from now.
That you wouldn't get a bonus for that.
Especially when you want to transform the whole company. So you cannot say, look, we have to transform the whole company and we will have the benefits in 8 years from now. So that will not. So you need also quick wins, and you might need a step in between. So for instance, the Klöckner.ai, so our digital hub in Berlin, that is a step in between. So that is the company who develops all these proprietary platforms and systems. And the next step now is, as mentioned, the launch of this real independent platform, which is a pure platform play business. When you do this at the beginning, it might not work because this is then too far away, and you will also have difficulties to leverage assets you have on the incumbent side. And I think so this step in between, that this works much better for an incumbent.
And from a Deloitte perspective, have you seen, I mean, this is very hard to generalize, but have you seen any difference in your clients depending on the ownership? Does it make a difference if they're a public company like Gisbert's, or if it's a family-controlled Mittelstand business that might not have to show results every quarter or every year, or is that not a factor?
It certainly is. I mean, let's not kid ourselves. Whoever is a CEO of a public company is running and is being pushed from a quarter to another. It's different if you're a privately held company and you have a chance to prove something. But to Gisbert's point, so I think, and also what Andre said, I mean, we do see a shift from a budget into an investment logic. This is what Gisbert is describing. If you need, on average, 7 to 10, let's say 7 years, if you need 7 years to prove if Flexbus is what it is today, they needed only 5. No CEO whose ticket is running for 3 or at max 5 years does have the time to prove that. So we need to shift from a budget logic. We need to stop running things that do not make at all sense and invest as investors. That's number one. And we do see that happening, not overly actively right now, but it is happening. Number two, what you mentioned is we need to find a way, because of course Flexbus is on stage because it's an overly successful company. But if they would not have gotten out of PowerPoint mode, they would not be here. And we do need more than one Flexbus. Because with all the discussions that we've seen over the last hours and we'll see in the next hours here, there's so much going on in automation and so on that we will need to figure out where are our new jobs. So we need much more Flexbuses. We need much more tech companies. And for that, I do believe there's a way to combine those guys. There are a lot of corporate assets that we need to digitize in order to make them enabler for those companies. And that's not happening yet, at least at a scale that we would say it's a trend, it's there.
Yeah.
I don't know.
No, I totally agree. We are not making enough of what we have as an economy and on a European scale. And it's especially, we need people who have the guts to say, this is what I'm playing for, this is the big vision, this is, and you need people on the other side, on the equity side, who understand that and who back that up. And yes, I understand the problem of, on the one hand, you have to deliver on the core business, then you can do some investments. And maybe in businesses like yours, it might be work that you say there are intermediate steps, and the assets you bring to the table are more valuable than the freedom of having not an old business. So that might fit for that business and might suitable for some other parts. But many of the platforms, I think the assets you bring to the table as an old company do not help you enough to restrict any freedom of operations, any freedom of making choices. So I think the corporates have to find their way and their niches or platforms where they can be successful. But many large platforms, I think, need more freedom and more funding and more.
I think the biggest problem here is what in principle what you're saying. The biggest problem for corporates is that they start completely different. They start typically with a big budget, with a lot of money and with a huge project team and everything. And a startup which has no money at all in the beginning, they have to start small. They have to come up with an MVP relatively quickly. They have to be successful in the market with an MVP relatively quickly. And this is completely different than corporates think. And this is the reason why it doesn't work within a company. And this is the reason why disruption from within, or one reason why this doesn't work.
And this is a difficult question, so you can dodge it if you don't like it. But if you were not a public company, let's assume you were a family-owned business, or it was an LBO, there was no public visibility of what you were doing inside the business. Would you have made any decisions differently in the way that you've done this startup? Would you have been more aggressive around the amount of resources you'd have put into it? Would you have been able to have a greater budget against it? Not necessarily tens of millions, hundreds of millions, but instead of 85 people, 185 or 285 people. It's a theoretical question, but it's tough for you. So,
no, it's a good question. I clearly would have been even more aggressive, no doubt. So, as mentioned, I have to take care also of the current business, and I'm having investors and analyst conferences, and I have to explain the current business, and I would do it more radical, no doubt. And but there's a constraint
That's
you have
life.
as a public company.
and how much capital has Flexbus consumed so far? Obviously, you're successful now, but when you look at the sort of the J curve, how much cash was consumed roughly? Just, you don't need to give me an exact number, but to the nearest sort of, a range you can give me. Maybe is it tens of millions
Very
or yeah?
More than we imagined at the beginning, and more than we would have been able to raise at the beginning. But I would say it for us, it was very much driven by M&A. So out of the core business, out of the core business, we didn't consume so much, and I think we could very early prove that the business works. And for scaling, you need to acquire competitors, you need to acquire new markets, and so we
you've used cash
raised
to do
a lot
that,
of the cash for M&A. And because we had already very early a relatively sustainable business, I don't say profitable, we have been profitable last year for the first time, but we could very early prove that it's on the right way.
So you could have been more profitable earlier if you hadn't, if you'd been so aggressive.
We needed more capital than you could justify on the current run rate, and that's true for most other startups. And if you look at our shareholder cap table, you can easily imagine that we raised more than 100 million and far more than that. So, and that was needed and required because, on the other hand, there were people sitting with like pockets full of money, billions and billions, and we knew we had the better business, we had the better team, we had the better commercials, but we needed to survive long enough because, and now I'm looking at Gisbert, of course, if you're a public company, you have to justify what you're doing, and I only have to justify what's my target, and am I on the right track? And I don't have to justify too much about immediate steps. And so our competitors were public companies, or even worse, state-owned companies, that you're also not only to the public, but also to politicians who have to justify what they are doing. And we always knew we have to have enough money to survive until they lose political support or the board is not willing to do it anymore. And so it's always tricky, and I don't know if that's true for all cases, but between like public companies and private companies, if you have a large vision and show the right commercials, I think the private company will always win because they don't have to justify for immediate steps, but only for the target.
Yeah, they have different investors. So
yeah, but I think the point that Gisbert made about the being all the time reliable to report almost to analysts, I'm not sure that's very helpful, by the way, because what we see, especially in Central Europe, is a tendency towards focus. You ought to focus your business. You need to sell things. I think if there is something to reconquer, then it's the ownership of understanding and working around the customer. If I look at all the big platforms, we don't need the names, the top 5 platforms, they're conglomerates. They're not at all focused. I would like to see how much of Amazon would have been there if Jeff Bezos would have listened to focus, focus, focus. Where's the focus?
Make profits, make profits.
The only focus is the customer, growing offerings around the customer. And I think that is something which, I'm not protecting listed CEOs, but I'm saying in order to get into that logic, it's not helpful if everyone is shouting at you, focus.
And maybe you need, I mean, and now I'm not publicly listed, so I got the easy part, but if you have the standing showing your current
when are
business,
you publicly listed?
you can take a stand and say, this is what I believe in and this is what I'm working for, and you buy yourself some time. But I mean, by definition, a founder-owned company and a private company is run that way, and you have to develop in the other way. And it's much easier to report annually, if you are on the right track to your big vision, then quarterly and shift to an annual focus and explain that it works together. I think it's incredible hard. That's why I'm not pushing for anything IPO or public, because then I have to explain to a lot more people where my vision goes, and to restrict my frame where I'm working on.
But at some point, your investors are going to need liquidity, and presumably your employees and so forth. So even if it's not a public listing, there'll be some liquidity event, and then there'll be visibility from those new investors as to how you're performing at some point. Maybe in 110 years, but...
might be.
But not too early. This is my recommendation as well.
I really buy that. And I mean, it's good. You see a lot of the big startups, they IPO a lot later than previously, because you see you get a lot of money on the private market. You don't have to explain your vision to like hundreds of analysts, but only to 10 investors, to your board of 5 people. I mean, that's an amazing situation. You can get a lot of money for the vision if you show the right commercials. It's easier to explain it to 5 people than to 500.
Yeah, I think the public market listing date is now much further out than it was even 2 decades ago. That's right. I'm just conscious of time, and one of the areas that we've touched on, but maybe is helpful to go into in a little bit more detail, is the people aspect and kind of what it means to change the culture. So with the companies that you've already started and to cannibalize yourselves with, were the staff that you put in charge of that, were they insiders, or did you bring people from the outside? And similarly, for your business in the transport sector, are any of your senior execs from the traditional industry, or are they all, like yourself, kind of young incomers? But
yeah, so the people in Berlin are mostly from other startups.
Right.
So they are clearly coming out of this startup ecosystem. But the challenge is more than to transform the corporate itself. And this digital transformation of a corporate itself, that is extremely challenging. We, for instance, in our company, our people have the possibility to take, we have a digital academy to take digital courses during working hours, unlimited. So we are saying on the one side, look, things will change going forward, and also with artificial intelligence and so on, a lot of jobs will not be needed anymore in the future. But you can stay with us. But in this case, you have to learn how the digital world, how the digital business works going forward. And so this is I think, for corporate, the most difficult part is this, especially in a such an established.
Because you've got 9,000 employees or something like that?
Around 9,000.
More than that.
Yeah. And also, for instance, we also have failure nights and things like that. So we also, this is also a big problem for corporates, because you don't make a career in a corporate when you fail. And now we have to tell our people, look, when you innovate, you might fail, but communication is not enough. You also have to make then things like failure nights. We have a hierarchy-free communication, by the way. We have an internal Facebook, so I'm able to chat with everyone in the company. And
do you do?
I do every day, by the way. I do this every morning. And I comment things, I ask things, and when we established this, a lot of people in the middle management had problems with it. They were asking me,
because they thought you were going around them.
Okay, they losing their information silos and so on. So there's a lot of change, but it works. When you consistently push this going forward, it works also in such an old company than we are.
So how many of the, roughly, of the employees kind of have embraced this actively, and kind of, do you feel are kind of with the program?
So we internally use, for instance, we use Yammer as a
analytics and those kinds of things.
But we have close to 100% of our white-collar people are on Yammer, and meanwhile also a lot of blue-collar people. No, it took some time. We started this, by the way, by chance. So my head of IT was saying to me, we have no Yammer, and I was asking, what is Yammer? And he was saying, this is some kind of internal Facebook. And I asked him, what can we do with this? And he said, we can open it. And I said, okay, open it. And so we tried it, and it works. And so I think this is what you have to do. You have to try things, and a bit like this. So like this startup spirit, you have to bring some. You will never. So Klöckner will never be a startup, but you have to bring some of the spirit, some of this behavior into the corporate.
And from a Flexbus perspective,
I leave room, no problem. I got the time. No, it's very impressive that you, because I see now we're only 5 years old, have 1,000 people, and I spend half of my day on communication, and I didn't care for culture like for the first 3 years, and if you would have asked me in the first 3 years, is culture important? I would have said no, I don't care about culture, because culture is something you get for free. You get it as a present because everyone behaves like you behave, everyone sees you, and so it's different. You don't care about culture, and then you realize if you're getting too large that culture starts to differ. And in our philosophy, I really try to hire bright people, give them a lot of responsibility, and I manage, for example, my largest business, I manage with a 1-hour show fix every 2 weeks. So I'm not at all deep in the business. And then I spend a lot of time on communicating, keeping the culture, because if you give so much responsibility to people, you want them to act in your way, in the way I think, the vision where we're heading on, the way we're working on. And I think it's impressive if you can maintain that, because I see how challenging it is with 1,000 people with 5 years legacy. It's already a challenge to keep everyone like in the right direction in terms of culture and vision.
Sorry.
No, I don't want to spoil the culture discussion, but I think you won't turn a cat into a dog. That's just for sure. So just
even with CRISPR or
just by
something
taking, I mean, the classes are great and education is all great, but I think if you really want to prove, if you really want people to put their next career step onto something, you need to show commitment, and you need to show that this is a place worth being, that this is a success. It's not a pilot project, because pilot projects are running for 6 months or for a year, and after that, where am I going after that? So I think it's on and we can't take our hands off and say, well, then corporates won't be around, because that's neither true. They will be around. But we need to show how does what we start in small, how does that look in scale? How does that look? How is this business going to produce 5-7 billions in a couple of years from now in order to replace a traditional business or to be additive to a traditional business? Then I'm going to put my career on it in a corporate environment. And the classes are a necessity, but success commits. So when a venture is successful, then people will bet their career on it.
So on that subject, I believe, and I'm picking the 5-7 number because when I looked at Klöckner's annual report, I believe your revenue last year was around that number, right? It's 6 billion from memory, and you know, as you mentioned, you're a middleman, so you're operating on wafer thin margins, you know, a couple of 100 million of EBIT and so forth. So if you fast forward 5 years for the new business that you're starting, how big do you think it will be roughly relative to the mothership? Could it be as big or bigger, or you know, how do you imagine that?
Yeah, so when we are, if we are successful with this new industry platform, then the value creation will be much higher than the value of Klöckner itself. So there's no doubt.
Okay.
And it will be either a huge success or we will fail. I don't see anything in between, because these kind of platforms have to dominate finally the market. It has to be the platform for the steel and metals industry. But the value creation is significant. You only have to be careful, by the way, that your supervisory board is not thinking you're getting crazy when you're presenting the numbers. But the number will be much higher than the value of Klöckner itself.
Okay.
No.
But isn't that impossible? Because I mean, at the end, you will have to have a dominating platform for your industry. But if anyhow you could get there, you cannot be majority owner, because otherwise no one will.
No, we will not.
Join.
We will not.
Is your pitch, I build a platform, which we will not own, which will substitute our business?
Now,
That's a very tough pitch.
now Klöckner will be, so we're financing this platform with venture capital, and Klöckner will be a minority shareholder.
Yeah.
So I need venture capital for two reasons. One, to make it independent from Klöckner, and secondly, also to have investors who know how to scale platforms.
And then you become an investment boutique with an attached steel business?
We might have three different kind of Klöckners going forward. We might have a platform business, we have probably a fulfillment business, and then we have a special service business, so more manufacturing-like business. So that's how I see Klöckner going
It's
forward.
a big challenge we're seeing.
Very
right?
big.
Exactly, this is the challenge, because everyone right now, every boardroom is building a platform. Guess what? There can't be that many platforms. Just can't. So it's not a platform. So what the challenge is, again, I don't want to be boring, but the challenge is how do we keep excitement level and in terms of traction up, and what's the governance? How does it look like? When does the venture capitalist come in? Because the first equity is obviously the most expensive equity. So when you have your own funds, you don't need a venture capital. You're not in PowerPoint mode. So you don't need venture capitalists in stage one. So when do you need them? When do you allow others, competitors on the platform? That's exactly what we're discussing now with all the big banks, insurance companies, auto companies. So that is a challenge, to find common sense beyond a single boardroom.
And if you could, outside of each of your own businesses, and maybe if you think across all the different blueprints that you've seen at Deloitte, kind of pick one example of a traditional player that has made this transition successfully, what would the archetype of that be? And it could be in any industry. Which is the most successful transformation that you've seen like that?
I think it's wrong to mention one name, seriously. It's really wrong. I mean,
So that means there isn't one.
I do see at the moment a very serious execution, not attempt, not ambition, not headlines. I do see a very serious execution in the automotive industry. Just take the HERE platform, which is combinedly owned by several competitors. I do see a more and more active move in the financial sector, because a lot of the things that we do see on the fintech and insurtech side are very, very much on the front face. It's not going deeper into the supply chain, into financial engineering. But there is not a company that I would name now. Seriously not. But they are all on the move. That is to be said, just in order to keep this reconquer. The talk is over for about 2 years now, I would say.
Okay. Well, this has been a very interesting panel. I think that there's a lot of food for thought for those of you who are owning or managing these legacy, very traditional but successful businesses as you face the digital age. And hopefully, Klöckner and Flexbus are inspiring ways for you to think about how you might take your business forward.
Thanks.
Thank you.
Thank you.